in all fairness, banks like Silicon Valley, they deserve a lot of blame too. These guys are probably getting paid millions of dollars. In fact, I saw that the CEO of Silicon Valley Bank cashed out like multiple millions, like $3 million just before this collapse in stock options or whatever he was doing. And ultimately, these guys are getting paid this type of money. You better be damn sure you understand the risks when you see the Fed raising rates. So they're not innocent here either. You know who's innocent? The retail investor that's gotten caught off guard in this stuff.
Gareth Soloway is a financial analyst and trader with over 20 years of experience in the financial markets. He is the chief market strategist and founder of The Money Stocks, a financial research and analysis firm that provides trading signals and market analysis to investors and traders around the world. Soloway is known for his expertise in technical analysis, which is the study of market movements and trends based on price and volume data. In today's video, Soloway dives into the Silicon Valley bank crash, commenting that it was no surprise that something like this would happen since the Fed started raising interest rates. He also blamed the regulators and Silicon Bank management for poor handling, which led to the bank's collapse. Soloway also comments on Bitcoin and analysis the trend chart, saying that as the dollar crashes, Bitcoin is rallying forward. He, however, said that Bitcoin would still retrace and bounce around for a while. He claims that the main reason for having Bitcoin is for times like this when there is so much turmoil in the market and people are looking for a safe haven. Let us now go into the video as Gareth Soloway talks about the crash. He gives reasons why Bitcoin is the safest asset to have and also as a gold maxi. And keeping to his gold predictions, talks about the two precious metal gold and silver. As you watch, make sure to leave us a like, subscribe, and drop a comment below.
Number one, I got to say this. The first off thing is that this is ridiculous that this is coming as a surprise to regulators, to the Fed, to the government. Like, think about this, guys. You just saw the Fed in basically 1 year raise interest rates from essentially 0 to 5%. All right. How does anyone not think that's going to not break the system? Okay. Again, in addition, and this is something I've said for a long time, I've gone nuts on this. I've said that you essentially have a scenario where the market and investors got addicted like a drug addict to their drug dealer. The Fed was always saving the day. They were always coming in and basically, giving us more drugs in terms of quantitative easing and cheap money. So the fact is, when you go cold turkey, what the heck do you think is going to happen? And I said this a year ago. I said this a year and a half ago. I said the system would break. I said, be ready for black swan events. They're going to come. And here we are today with the banking sector a mess. Europe is now a mess. We're seeing, again, the banks in Europe getting absolutely annihilated today. And again, it's kind of common sense. To me, it's common sense. Now, in all fairness, is it the Fed's fault that we're in this predicament? Partially, yes. And the reason I say partially yes is because, they said transitory, right? We remember that word, transitory. Inflation is going to be transitory. There's no need to really jump on and start raising rates yet because it's going to be transitory inflation. They were wrong. They had to play catch up, which means they had to jack rates up in a short amount of time, insane amounts. And remember, we're not just talking about going from 0.25% to 5%-ish. We're talking about the rate of change, how quickly it happened, and we're talking about how many hundreds of percentage points that was an increase from 0.25 to where we currently are.
As Soloway commented, there is no surprise for the market crash, and that is why he advises his followers to have Bitcoin and gold as they provide more stability during periods like this. Let us hear what Gareth says about Bitcoin.
The dollar is getting a pop today. Look at this. Now, why is the dollar getting a pop when inflation's coming down? I mean, riddle me this. The answer is very, very simple. The dollar is getting a pop. It's ignoring the PPI data. Instead, you know what it's doing? It's looking at the craziness in Europe. When people get panicked, when they get so fearful, do you know what they do? They buy US dollars and they also buy gold. All right, that's what people run to. So it has nothing to do in a normal scenario. If the banking mess in Europe wasn't going on, if the banking mess in the US wasn't going on, you know what they would do? They would be probably selling the dollar on the PPI data. But because of this, because of the issues here, people are running to the safety of the dollar, and that also is not a good thing for the US markets. Markets don't like a higher dollar. You know what else doesn't like a higher dollar? Bitcoin. Bitcoin, again, pulling off yesterday's high. But look at this chart. This is why I use charts in every day. I had a long and verified investing crypto in Bitcoin. You know where we unloaded it? We unloaded it right into this trend line here. Look at how this trend line has caused price to pull back every time. And so again, the thought process here is, well, don't try to reinvent the wheel, just follow the freaking charts. And that's all I did. So yesterday we unloaded just above 26,000 our Bitcoin position, and it's pulled back since then. Now, again, part of that was also a 3-bar surge. We know that in trading, when you have 3 mega green candles to the upside or 3 mega green candles to the downside, in general, you get a bounce or a pullback. In this case, when it's a sharp move up, you get a pullback to the downside. Now, Bitcoin's hanging in there today in spite of a stronger dollar. Now, that's kind of weird. Why is Bitcoin up when the dollar is surging? The answer is so simple, and it's so poetic for why I like Bitcoin long term. Now, you guys know, shorter term, I still think we're going lower. That hasn't changed. 12 to 13,000 first target, maybe 9,000 second target. But on the longer term basis, what we're seeing today, what we're seeing for the last week is exactly why Bitcoin was invented, why it came to fruition. It's because when you have this craziness in the system, when you have scenarios where the government has to come in and backstop deposits, when you have all this stuff because these banks are not doing and following the rules, or essentially they're not managing their own risk, you know what is okay? Bitcoin. And so you're seeing people, think about this. Think about how investors are selling banks and actually buying Bitcoin. This should be the most freaking exciting thing to any of us that we're seeing out there, to see this occurring, because this shows you that there is an alternative. That for some of us, yeah, I have most of my money in banks, for absolutely. But again, am I looking at Bitcoin as a long-term potential to offset risk in the banks, to offset risks of printing of money? Absolutely. And that is why what you're seeing in this latest crisis is why Bitcoin will survive, in my opinion, and will thrive down the line. Now, granted, it's got to go through growing pains. We know that. Growing pains, yes, every asset does in the beginning. It's only really 14 years old. Bitcoin is a baby, basically a teenager at this point. So you have to let it go through growing pains. Okay, so what's going to happen here? For me on Bitcoin, I think you're going to pull back to this line right here. You might get a little bit of a bounce. Then I ultimately think you'll retest down here and eventually break lower. I still think, again, this 18,000 and change level will be meteoric support. I plan to buy some Bitcoin off that level. There's another level here to look at. Take a look at this. If we put a trend line in right here and we put it from this low and just curl it up, look at where that line coordinates, right at the 18,000-ish level, 18.2. So to me, when you have a confluence, when you have 2 or more trend lines converging, and if price comes in there, that is a huge level of support.
Soloway also talks about gold and silver. According to Gareth, you can't get away from the fact that the Fed is now keeping interest rates where they are. They're probably going to tighten a little bit more, but the bottom line is they're not going to be looking to cut until we see a massively nasty recession. He also makes his predictions on silver, looking at a $23 mark.
You have your up move for 2 years from 2018 to 2020. You have sideways consolidation. I still remember when we were trading down here, everyone was like, oh, Gareth's insane. Gold stinks, da-da-da-da-da. Yet it was still the best performing asset between the S&P 500 as well as Bitcoin. And then look at the run it's gone on here. This was my prediction, is that when the Fed finally gets to a point where they have to pause because things get so messy in the economy, you know what's going to happen? We're going to see gold rip. Now, gold is going to have resistance coming up at this upper trend line around $1,955. That is okay. That's normal. It's going to have a pause, a pullback, and then it's going to bust through and break out. And then you know where it's going to go? It's going to go to your double top high right here. All right. By the way, I have to just point this out. This morning, BlackRock's Larry Fink, who is, by the way, one of the most respected investors and traders in the world. Take a look at silver. Silver is running in verified investing alerts, which is my stock service at In the Money Stocks. We are long SLV, and SLV continues to run up here. Where's SLV going to run into resistance? Right here. This is going to be your resistance line. I think it does get up here before it pulls back. Your target is around $23 on silver. So great move from basically sub $20, now above 22 and a quarter. I think you have a little bit more upside. Eventually, is it going to break out of this wedge pattern? Yes. Eventually, yes. But you'll have some pullbacks coming up here on this chart.
As startups and VCs scramble to get their money into safe hands following the collapse of Silicon Valley Bank, they turn to a Wall Street stalwart, Bank of America. But as the saying goes, from chaos comes opportunity. It seems in this case the opportunity has fallen into the lap of Bank of America, which brought in more than $15 billion in deposits as SVB sunk. Sources familiar with the matter told Bloomberg the inflows came from fearful customers moving their money to an institution, the second biggest bank in the states, that is seen as simply too big to fail and is considered to be so by the Federal Reserve. Bank of America isn't the only giant bank seeing an influx of new trade. According to reports from the Financial Times, JP Morgan is supporting its raft of new customers by shortening the waiting time for opening an account. It is also speeding up the rate at which new customers can access funds in order to ensure they can pay staff this week, confirmed a source briefed on the matter. Citigroup has also reportedly scrambled to onboard customers, with all the large financial institutes seeing a particular push from account holders with holdings above the $250,000 threshold that is guaranteed by federal insurance, despite the government pledging they would still be covered. As the saga keeps unfolding, fear is taking a hold of many investors, and small startups are suffering the bites of the collapse. Everybody is unsure of a path to take even with the Fed promises, but crypto enthusiasts seem to be having more of better days since the collapse. What do you think would be the outcome of this in the long run? Is more collapse coming? Let us know in the comment section below. Also, don't forget to give us a like, subscribe, and turn on post notifications. Thanks for watching.